Good morning, students. Welcome to Multinational Financial Management online class. Today we will discuss about the international tax environment. Okay. So, what is international tax environment? And so, before learning about the international tax environment, we must learn about the different tax system. We all know that tax is one of the main source of public revenue, right? So, so for understanding the tax system, we must know about what is different tax system. Okay, so we can say that taxation is one of the main variable for various financial decisions of MNCs. Okay, and such as international investment decision, international working capital decision, fundraising decisions, and decisions regarding dividend and other payment. So these decisions become more complex when we take into account the multiple tax jurisdictions and tax rate. Why multiple tax jurisdiction or multiple tax rate? Because here MNCs are investing in different countries. So because of the investment of the different countries, they must follow the different tax rate applicable by the government of different countries, right? Like in India, if any foreign company want to invest, they invest through the foreign direct investment. So whatever the charges, whatever the tax rates are decided by the Indian government under the FDI, so those foreign companies follow that tax rates. So that's why they are following the different tax rate system. They even follow their home country tax rate system, and at the same time they are following the other countries' tax rate system in which they are investing or they open their MNC. Okay, so. The international financial executive need to be knowledgeable about the broad outline of the international tax system. So whatever the person who is appointed as a financial executive, it is his responsibility to have the enough knowledge about the different tax rates of the different countries where the company is decided to invest. Okay, and international tax system should be equitable and avoid double taxation. Okay, so avoid double taxation means whatever the MNC is want to invest in, suppose that इंडिया में वो इन्वेस्ट कर रही है, तो उनके लिए प्रॉब्लम क्या होगी? वो अपनी कंट्री में भी टैक्स पे करेंगे, यहाँ पे भी टैक्स पे करेंगे. टैक्स सिस्टम जब इंडिया में आते हैं तो आपने देखा है डिफरेंट टाइप्स ऑफ टैक्स सिस्टम्स हमारे पास अभी इंडिया में थे जीएसटी के आने से पहले. ओके, तो जीएसटी के आने से पहले जो कंपनीज थी वो डिफरेंट टैक्स सिस्टम्स को फॉलो करती थी. आफ्टर दैट इंडिया जो है जीएसटी लेके आई, किसी सर्विसेज टैक्स को लेके आई, और इंडियन गवर्नमेंट का कहना था कि नहीं अब हम एक सिंगल टैक्स सिस्टम को लेके चलेंगे. मगर व्हाट अबाउट द एमएनसीज क्योंकि इंडिया में प्रॉफिट अर्न कर रही है, फिर उस प्रॉफिट को वो अपनी कंट्री में लेके जा रही है. आपको याद हो मैंने आप लोगों को वर्किंग कैपिटल मैनेजमेंट जो था उसका एक टॉपिक पढ़ाया था, कैपिटल बजटिंग का भी, जिसमें हमने ये देखा था कि जब जो रिटेन अर्निंग्स के बारे में हमने डिस्कस किया था, जिसमें गवर्नमेंट जो होती है, जो होम कंट्री गवर्नमेंट थी जहाँ पे एमएनसी ने इन्वेस्टमेंट किया था, उनका ये कहना था कि आप पूरा जो है प्रॉफिट अपनी कंट्री में लेके नहीं जा सकते, आपको कुछ पोर्शन यहाँ पे गवर्नमेंट को भी टैक्स के फॉर्म में पे करना पड़ेगा. तो क्योंकि जो एमएनसी है वो इन्वेस्टेड कंट्री में भी टैक्स पे कर रही है और फिर अपनी कंट्री में जाके भी जो प्रॉफिट के ऊपर टैक्स अर्न कर रही है, तो उनको डबल टैक्सेशन सिस्टम को फॉलो करना है. तो इसको अवॉइड करना बहुत जरूरी है. अवॉइड कैसे होगा? जहाँ पर हम एक ऐसा टैक्स रेट सिस्टम लेके आए जो कि उनके लिए टैक्स बर्डन ना बन जाए, राइट? So it is very important for the international tax system. It should be neutral, equitable, and avoid double taxation. Okay, and tax capital among different countries. Okay, and if tax is neutral, the investment will move from the countries with lower return to countries with higher return. Okay. अब अगर टैक्स रेट सिस्टम जो है वो हम डबल टैक्सेशन को अवॉइड करते हैं, न्यूट्रल रखते हैं, इक्विटेबल रखते हैं, तो व्हाट विल हैपन? तो इनके लिए क्या होगा? जो कंपनीज इन्वेस्टमेंट कर रही हैं उनके लिए हायर रिटर्न, लोअर रिटर्न से हायर रिटर्न हो जाएगा, क्योंकि टैक्स कम पे करेंगी, प्रोडक्टिविटी ज़्यादा होंगी. टैक्स कम करने का मतलब ये नहीं है कि हम बिल्कुल भी टैक्स लेवल जीरो कर देंगे. टैक्स लेवल ऐसा रखना है कि उनके लिए टैक्स बर्डन ना हो एमएनसीज के लिए, क्योंकि अगर हम टैक्स रेट ज़्यादा कर देंगे तो हमारे पास फॉरेन कंट्रीज की कंपनी हमारी कंट्री में इन्वेस्टमेंट करने नहीं आएगी. ओके, and capital export neutrality means that the tax rates of taxes should be same between domestic investment and the foreign investment. which implies that the pre and the past tax return is same between a capital exporting and capital importing country. Okay, and the uniformity of this kind is difficult to achieve because of differences in accounting policy and tax rate of different countries. Because foreign companies are investing in their foreign currencies, so what is what will be their motive? Their motive is to pay the tax in home country. देखिए अभी कोई भी कंट्री है, कोई भी कंपनी है जो इन्वेस्टमेंट कर रही है, तो उसका ये कहना है कि क्योंकि हम अपनी आपका जो टैक्स का जो अमाउंट है वो आप अपनी होम कंट्री की करेंसी में हमसे मांग रहे हैं, तो इट इज जो हमारे लिए स्टेप क्या होगा, पहले हम करेंसी से कंट्रोल करें, जब जाके टैक्स पे करें। तो हमारे लिए टैक्स सिस्टम जो होना चाहिए, जो टैक्स रेट जो होना चाहिए, वो ऐसा होना चाहिए कि हमारे ऊपर बर्डन ना पड़े। तो गवर्नमेंट जो भी कंट्री की होगी, गवर्नमेंट का ये कहना है कि हम टैक्स रेट जो आपके पास आएंगे वो मिनिमम ही टैक्स रेट रखेंगे ताकि आपका इन्वेस्टमेंट ज्यादा हो हमारे पास, राइट। बट उनके लिए ये चीज याद रखिएगा, जो भी एमएनसी ने अदर फॉरेन कंट्री में पैसे अपनी कंपनी ओपन कर रखी है, उनको अपनी कंट्री में जब वो प्रॉफिट लेके जाएंगे तो वहां पर भी टैक्स सिस्टम को पे करना पड़ेगा, जो भी वट एवर द टैक्स रेट इज एप्लीकेबल बाई देयर होम कंट्री गवर्नमेंट। ओके, see, you can see on your screen. Okay, so these are some data. Okay, so you can see Australia top tax rate is 33%. Okay, and Austria 34%. Belgium is 40.17%. Canada is 44.3%. Denmark is 34%. Finland is 35%. These are the top tax rate of different foreign countries, as you can see here, and these are the top 26 and the highest tax rate, which is yes, the highest tax rate you can see it is between the Germany.
Germany.
Yes, it is Germany. Germany is charging the highest tax rate. So what are the reasons behind charging these the highest tax rate in Germany? एनीवन कैन, आप में से कोई मुझे बता सकता है कि जर्मनी सबसे ज्यादा हाईएस्ट टैक्स रेट क्यों ले रही है? इट इज 58.95, ऑलमोस्ट 58.95. व्हाई? व्हाट आर द रीजन बिहाइंड? व्हाट कुड बी द रीजन? यस, व्हाट कुड बी द रीजन बच्चों? रीजन क्या हो सकता है? रीजन कुछ भी हो सकता है बेटा, कोई एक रीजन हम टैक्स रेट का नहीं दे सकते। इट मे बी पॉसिबल। निशांत कुमार, एम आई ऑडिबल टू यू? As you can see, many countries follow the worldwide principles that they have the right to tax income earned outside. Okay, their boundaries by subsidiaries based on their country. So the US government can tax the earnings of the German subsidiaries of a firm headquartered in the US. And double taxation occurs when the income of a foreign subsidiary is taxed by the host country and home country governments. Okay. However, the burden of double taxation is legitimate to some extent by the tax credits, tax treats, and the deferred principles. So here you can see. Once again, let me highlight this one. The burden of double taxation. You can see here, burden of double taxation. Why double taxation? One tax, double taxation means आपने एक फॉरेन कंट्री में जहाँ पे इन्वेस्टमेंट किया है वहाँ पे आप वट एवर द प्रॉफिट यू आर अर्न, आपने जो भी प्रॉफिट वहाँ से अर्न किया है आपने उसमें टैक्स पे किया, एंड देन आफ्टर दैट आप उस टैक्स पे करने के बाद जो भी आप प्रॉफिट लेके अर्न करके अपने जो प्रॉफिट अपनी होम कंट्री में लेके आ रहे हैं, होम कंट्री में आप लेके आएंगे तो वहाँ पर भी आपको टैक्स पे करना पड़ेगा। So that is called as a double burden. Okay, so however a double burden is legitimate to some extent by tax credit, tax treats, and the deferred principles. So जो आपकी गवर्नमेंट है, जो आपकी कंट्री की, वो बहुत सारे ऐसे रूल्स एंड रेगुलेशंस भी आपको देती है जिसमें आपको रिलीफ मिल पाएगा double taxation. So our tax credit allows an international business to reduce the tax paid to the home country. See, a tax credit allow an international business to reduce the tax paid to the home country by the amount of taxes already paid to the host country. And what is tax credits? You can see here.
Ma'am, hello.
Whatever your query is, better please message in the message box. Drop your message in the message box. Okay. Right. So tax credit allows an international business to reduce the tax paid to the home country by the amount of taxes already paid to the host country. So there are some modes for the double taxation relief, and these are the modes like credit system without difference, the credit system with different tax exemptions, reduction of tax paid by abroad and expenditure, and investment credits. These are the modes and with help of these modes, a business can get relief from the double taxation. So, what is credit system without different? As is in credit system without different, the tax paid till the host country are allowed as a tax credit in the home country, right? This happens. For example, the tax rate in India is 35%. Let us assume that the tax rate in India is 35%, and foreign subsidiary of an Indian company paid tax at the rate of 40%. So the excess paid will be allowed to be offset against the amount tax paid in the home country. Okay, so suppose that there is a suppose that there is a 35% of tax rate in India, और फॉरेन सब्सिडी जो थी, जो इंडियन कंपनी जो थी उसने पे किया है, जो टैक्स किया है वो एक्चुअल उसने पे किया है 40% का. So the excess tax paid. So what is the excess? 5% excess. Okay. So the excess tax paid will be allowed to be offset against the amount of the tax paid in the home country. So this is one of the mode, that is credit system without difference, can be used to get relief from the double taxation. Okay. The second is credit system with different. Credit system with different means in credit system with different, the taxation in home country is deferred until earnings from the subsidiary are repaid to the parent company. Okay, and where is parent company? Parent company is in home country. And profit of the subsidiary are taxed at the rate prevailed at the host country. Okay, so they are subject to home country tax only when they are repatriated. Okay, so this is the second mode to get the relief from the double taxation. Tax exemption, we all know that there are some provisions and guidelines given by the government to get the exemption from the tax. And in the international term, how can we exempt the tax? So, if the profit of the subsidiary are taxes in the host country, they are exempted from any taxation in the home country. Okay. So, whatever the profit earned by the subsidiary which are taxed in the host country, they are exempted from the any taxation in the whole country. Okay, for example, आपकी कोई एमएनसी आपने ओपन की है यूएस में, एंड पेरेंट कंपनी जो है आपकी इंडिया में है, तो आपने अगर यूएस में कोई टैक्स पे किया हुआ है, तो वो टैक्स जो आपने पे किया है, तो आपकी होम कंट्री में आपको उतने का आपका रिलीफ मिलता है, एग्जेम्पशन मिलता है. Okay, और this type of provision in the France and Netherlands. Okay, so most of the this type of tax exemption at the international tax system, you will get in the France and Netherlands. Okay, these are the three modes of you can say double taxation relief. Okay, the next is deduction of tax paid abroad as expenditure. Reduction of tax paid abroad as expenditure. How? A similar provision is that taxes paid in foreign countries are treated as expenditure. So, MNC can show the tax amount paid as an expenditure. Okay, and it can be allowed them as a deduction from total income in the home country, right? So, जब वो अपनी बैलेंस शीट बच्चे प्रिपेयर करेंगे, तो उनकी बैलेंस शीट दे कैन शो दैट नॉट बैलेंस शीट, इनकम स्टेटमेंट. ओके, तो जब वो अपनी इनकम स्टेटमेंट प्रिपेयर करेंगे बेटा, तो वो इनकम स्टेटमेंट में वो अपने जो टैक्स उन्होंने फॉरेन कंट्री में पे किया है वो उसको एक्सपेंडिचर के तौर पे उसको शो कर सकते हैं, और वो एक्सपेंडिचर जो उन्होंने शो किया है दैट कैन बी अलाउड एज अ डिडक्शन फ्रॉम द टोटल इनकम इन दी होम कंट्री. ओके. And the fifth mode is investment credit. How? In case or investment credit, the amount of capital invested abroad is deducted from the income earned in the country of residence. Okay. So these are the five modes a MNC or a business or a company can use to get the relief from the double taxation system. Okay. So I hope you all understand how to get the relief from the double taxation system for an MNC or a company. Okay. Now, a tax treaty between two countries is an agreement specify what items of income will be taxed by authorities of the countries where the income is earned. Right. Okay. So, tax rate, you all know tax rate are predetermined by the authorities. Who are the authorities? The government. Okay. Okay. Now, these pre-decided or predetermined tax rate are charged on those items that are related to the income, right? And income means the income is what the income is earned. Okay, आपने show किया हमारी income हुई है, it should be in the mode of earned. For example, a tax between the US and Germany may specify that a US firm did not pay tax in Germany on any earning from its German subsidiary that are remitted to the US in the form of dividends. Okay, now, dividend is we get dividend on the investment. Okay, so here what the example is saying that a tax treaty between the US and the Germany may specify that a US firm did not pay tax in Germany on any earnings from its German subsidiary that are remitted to the US in the form. Okay, so in this is one of the way how to get relief from the taxation, double taxation system. And a deferred principle specify that the parent company are not taxed on foreign source income until they actually received a dividend. Okay, so this is the we can say the pre-decided predetermined rules that are created by the government of the country to take the tax on the decided items on किसी कौन सी आइटम पे हमें जो है आइटम ऑफ इनकम पे हमें टैक्स जो है वो चार्ज करनी है, एंड वी कैन टेक द हेल्प ऑफ दिस एग्जांपल, राइट. Okay, now let me just define the more taxation system. Yes, I hope it is visible to all of you. The heading, the types of taxation. Okay, so here is the data of year 2015-16, right? And it is describing about the corporate tax. And you all know that corporate tax is one such as tax levied on domestic companies, right? You all are aware about it. So under income tax, smaller companies pay higher effective tax. How? You can see this table of year 2015-16. You can see profit before tax, okay, in rupees crore. 0 to 1 rate is nothing, but the effective tax rate in percentage is 26.7. And surcharges on domestic is 5%, and for the foreign company is for 2%. See, okay. Now, profit between the 1 to 10 crore, the effective tax rate is 25.33, right? Surcharges on domestic are 7%, and for the foreign companies, it is 5%. For the income between 10 crore to 50 crore, the effective tax rate is 23.23, and the surcharge is 12%, and the foreign company is 5%. So you can see here. Okay, now this line, this one, okay, this one. 50 to 100 crore, the earning, the profit before tax in 50 crore to 100 crore, between 50 to 100 crore, rate is 30%, and effective tax rate is 22.72%. Surcharges are 12%, and the foreign company is 5%. So you can see here, The lower the income, the higher the tax rate. The higher the income, the lower the tax rate. You can see here. This one the lowest income. Okay. And this is the highest income. So you can analyze from this table, students, that the smaller companies pay. You can identify with the income that 0 to 1 crore income is related to the smaller companies. Okay, for example. So you can see that the smaller companies with this lower income profit, they are paying the high tax, and the higher income are paying the lower tax. So in the case of foreign companies, the surcharges are different at the reduced rate. Okay, so remember this. The surcharges is 5, 7, 12%. But in the foreign company case, surcharges are different and at reduced rates. Okay, so these are the you can see the types of taxation, and you can observe, students, that the tax rate are not same for the incomes. They are different for the different incomes. Okay, so overall the motive of the government is to earn, because tax are the main sources of public revenue. So the purpose of government is to cover all incomes of the companies. Okay, वो चाहती है कि सारी companies की जो income है वो cover हो. That's why they created a different types of different tax rates. Okay, so here in your screen you can see there are some about the indirect taxes, and in Indian context you know what are the indirect taxes, and we can take like the best example of indirect taxes of like here you can see the various indirect taxes are customs, like central excise, like service tax, like education tax, state sales tax, new indirect taxes that is applicable from 1st of April 2017, GST. Okay, so these are the indirect taxes, and these taxes, indirect taxes, are divided by the Indian Income Tax Act 1961. And why? In order to provide for rate of income tax, right? Measure to curb black money, measure to promote domestic manufacturing and improving investment. Yes, students. And dispute resolution and rationalization measures. So these are the about the indirect taxes. Okay. One second, students. Wait. Yes, students. So you can understand with this table that there are different tax rates for the different companies for different profit. Okay, and these are about the indirect taxes, right? So now the next topic under this is about the Indian taxation system. Okay, how tax systems are created by the government in India. So you all know that Indian government has its own taxation rules. Okay, and it influences the international business activities also. And the rules provided for both direct and indirect taxes. Remember this: the taxes rates are decided by or made by the Indian government according to their taxation rule. Okay, because Indian government make their own taxation rules. Okay, so for that purpose, they made rule for both direct and indirect taxes. And tariff being an indirect tax is divided on imports. Okay, so remember this that tariff are being an indirect tax is divided on imports, and the rate varies from commodity to the other. Okay, there are different rates for one commodity to another. Different commodities के लिए different जो है rates भी available हैं. So the norms and the rate of income tax vary depending upon whether a company is domestic or foreign, and also whether a company is a resident SSC or a non-resident SSC. So these all are come under the Indian taxation system. Before levying any tax on the company, it is necessary for the government and for the business or for the companies to identify themselves whether they are resident SSC or non-resident SSC. Okay, because the rates are according to the these residence status. So a domestic company means a company which is registered in India under the provision of the Indian Companies Act 2013. 13. Here I'm saying about the Act 13, 2013, right? Because the Act is amended in year 2013. And this company declared the dividend. Okay, so a company can be said as a domestic company when it is registered under the provision of Indian Companies Act 2013, and it declared dividends, its dividend in India, right? Okay. Now and the other companies means beside the domestic company, the other companies are created as a foreign company. So the company which are other than domestic company are known as the foreign company under the Companies Act 2013. So our domestic company is treated as resident SSC, right? And the foreign company is treated as a non-resident SSC, right? And according to their residential status, rates are decided. So the income is compensated into Indian income and foreign income. Okay, and for the Indian income means for the domestic company income that arises in India and is received deemed to be received in India are known as the Indian income for the domestic company, right? And the income that arises outside India but is received or deemed to be received in India, right? And the income that arises in India but is received or deemed to be received outside India. These are the three circumstances for creating the income of domestic company as an Indian income. First is that arises in India and received or deemed to be received in India. Second is that is arises in India or outside arises outside India but is received and deemed to be received in India. And third is the income that arises in India but is received or deemed to be received outside the India. These are the three conditions for the Indian income for the domestic company. For the foreign company, for foreign income is an income that arises outside India and is received or deemed to be received outside India. That income is known as the foreign income. And according to these incomes, taxes are divided by the government of India. Okay, okay, students. So for the latest rate of interest, you can find it on the income tax website of the Indian government. Okay, you can find there, or you can check out the tax slab of India for the present fiscal year. Okay, So, and you know how these incomes are charges and how these incomes are divided on the Indian companies. And I will upload this PDF file to into your Google Classroom, and where you can find out the charges, the in-tax rates. Okay. In my book, it is showing that income tax is for domestic company 30%, and for the foreign company is 40%. That means it 30% on charge on the income, domestic income, right? And for the foreign company it is 40%. Surcharges are 12% for the domestic company, and again the same surcharges are charges for the foreign company, that is 12%. But if income exceed for rupees 10 crores, okay. And if education says 2% same for the domestic and foreign company, and higher education are the same at the 1%. And tax on dividend assuming 90% distribution at the rate of 9.74%, and for the foreign company that is a total of 46.0% at 46.0%. Right, so these are the some tax rates for the domestic company and foreign company. But before identify the domestic company and foreign company, you must know the provisions made by the companies Act 2013 for deciding the domestic income or foreign income. Okay, and there are some sections in the Income Tax Act which decided the provisions and different tax rates for the company and domestic company. These are started from the 80G and it goes to 80O. It is available in this PDF file. You can find out in the PDF. Okay. So this is all about the international tax environment and how the governments are charging taxes from the MNCs and the domestic company, and what are the difference between the rates of the domestic company income and the foreign company. Okay, sure. So I hope you all understand what is international tax system. So that's all for today. Thank you.
Thank you, ma'am.
Thank you, ma'am.
Thank you, ma'am.